Hi, welcome today. This is Journalizing Part 2. Don't fear the debits and credits. Why do I say don't fear the debits and credits? Because the one thing we do tend to do as students of accounting when we first get to it is to fear what debits and credits are. Hopefully this video will demystify what a debit and a credit is. So please do not fear debits and credits. Well, let's first start off with the T account. T account is an accountant scratch pad. It looks like a T with an account name and an account number. The debit side is the left side, the line going down is the equals, and the credit is the right side. Well, why is the debit the left side? Why is the credit the right side? Well, in old days, meaning medieval days, when accounting was developed, it was developed by a monk who spoke Latin. And the word debit means left in Latin. The word credit means right in Latin. Left and right of what? The side of the accounting equation. That's all. So don't fear what debit and credit mean. Debit means the left side of the equation. Credit means the right. Now we're going to rewrite the accounting equation to an easier version for you to start to fill in the debits and credits. The new accounting equation will be assets plus expenses equals liabilities plus owner's equity plus revenue. These are the plus sides. So in other words, looking at this, I can see that assets and expenses are on my T on the left side. They explain what we got. So as assets and expenses go up in value, we debit them. Liabilities, owner's equity, and revenue are on the right side of that equation. So as they go up, they are credited. In other words, how we got those assets. So again, credits for liabilities, owner's equity, and revenue. Another way of looking at this, I hate to have to figure out all this by myself if I, on a test and I forget. There is a good little short idiom that sometimes is used. Now it says assets are used. So as assets are used, now assets are on the left side, they become an expense and everything else is on the right. So in other words, the assets and expenses are here on the left. The liabilities, owner's equity, and revenue are on the right. So again, as assets and expenses go up in value, they are debits. As liabilities, owner's equity, and revenue go up in value, they are credits. Well, what happens if it's on the other side of the equation? Let's assume that assets were placed over here. Mathematically, that would mean a minus to assets if it was on the right side. So a minus to an asset would be a credit. So a minus to an asset or an expense would be a credit. A minus to a liability owner's equity or a revenue would be placing it on the left side of the equation, which would mean a minus to those accounts is a debit. Let's look at those same examples that we looked at in Part 1. So the first example was we purchased supplies on account. Again, I go through the same process as I did in Part 1. What accounts are involved? Supplies and accounts payable. So I asked myself, what did I get? I got more supplies. That means I got more of an asset, which is on the left side of the equation. So all I have to do is debit the supplies account. I also have more that money that I owe to the vendor who I bought the supplies from. Since I owe more money, the liabilities are increased, which is on the right side. That explains how we got those supplies. So again, what we got was supplies debit. How we got it was we charged the supplies and we will pay that vendor later. Okay, so don't try and make this harder than what it is. Just think in terms of left and right What we got and how we got it. Let's look at another one. We paid a bill. What did the business get? It got less bills owing. What does that mean? It means that the liabilities are going to get smaller. So that means they have to go to the left side. So that means what we got is less liabilities, so we debit them. So debit accounts payable. How did we get less liabilities? We paid the vendor. So that means the asset cash has to go over here on the minus side, so that makes it a credit. So debit to accounts payable, credit to cash. The third example we used in part 1 was we purchased a computer and paid cash. What did the business get? It got a computer. So that's a plus to an asset, so that means it's a debit. How did it get more computers? Well, we paid cash. So that means we have less cash, which means it flips to the other side and becomes a credit. The fourth and final one was we changed an accounts payable into a notes payable. So what did the business get? It got a relief of a liability. So that means the liability accounts payable is a debit. How did it get it? Well, it signed a note. So we have more liabilities in notes payable, so we credit notes payable. So again, debit or accounts payable, credit notes payable. Everything we did in this part 2 of journalizing was based on what we did in part 1 of journalizing. What we got will be the debits. How we got it will be the credits. So again, what we got are the debits, how we got it are the credits. Don't fear debits and credits. Debit just means the left side of the accounting equation, credit is the right side. Debits refer to what we got, credits to how we got them. So we will refine this a little bit in step 3, where we'll look at a real journal and see what it is, what it looks like